Welcome to MRII's Insights and Innovators podcast, where we talk to top market research professionals to get their inside stories about innovative and enduring best practices. Today's episode is sponsored by Question Pro. Question Pro is the web-based software for creating and distributing surveys. With our intuitive wizard interface, digital distribution of surveys, and tools for analyzing and viewing results, Question Pro delivers answers in real time. Now, here's your host for today's episode.
Welcome to our episode, M&A and MR. I'm Katie Gross, president of Suzy. And today I'm very excited to be joined by Jeff Krentz, an experienced leader with deep expertise in strategy, as well as mergers and acquisitions, and a lot of investments in the market research world. Jeff, thanks so much for being here.
Hi, Katie. It's a pleasure to speak to you today. And before we get started, I wanted to tell you how much I enjoyed listening to the first few episodes of this new podcast. You've had on some great guests. I'm delighted and grateful to be here.
Thank you so much.
Yeah.
So, Jeff, your career spans a wide range of leadership roles and advisory roles, and notably shaped by 2 decades at Kantar, leading M&A.
Yeah.
But before we get into M&A, let's talk a little bit kind of about the start, raising capital for growth. Raising capital, of course, has always been a really critical part of scaling businesses, particularly in market research and market research technology. Innovation, technology changes so quickly. So from your experience, what are those key factors that companies in this industry need to consider when they're first starting to look at raising capital? And how should they start to position themselves to attract those right kind of investors? Their pitfalls they should avoid.
Yeah. I'm glad that you asked this question, Katie. As the corporate venture side of my job at Kantar was definitely an area that I enjoyed the most. So from my point of view, the key factors in raising capital are being realistic about the capital you need to raise and how you're going to deploy that capital. You'd be amazed how many early stage companies are not clear about these fundamental aspects of growing a business. Also, understanding the market you're addressing and creating and how your product or service is improving the status quo. In other words, what's genuinely unique about your proposition to the market. I guess the third thing is, have you established what is often referred to as product market fit? So is there a demonstrable need for your product or service and are clients willing to pay for it? Critical. Can you convince investors that you have a viable long-term business model? Right? In other words, how are you going to consistently generate profits and cash once you hit critical mass? A softer point is whether what is often referred to rather as a bankable team and CEO. Right? If you haven't been an experienced and successful entrepreneur, what skills and experiences do you have to give investors confidence that you and the founding team can build a company successfully? And then your question about finding the right investors, that of course is essential. Chemistry, professional respect, trust are all absolutely essential. Building a company is incredibly tough, even in the best of circumstances, right? The key question is whether you have that type of relationship with your investors that enable you to weather the tough times as well as the good ones.
Yeah, that makes a lot of sense. And I think what you mentioned about product market fit really stands out to me. I think now with AI, which we'll come on to, there is a lot of solutions looking for problems to solve.
Yeah.
And there is necessarily that product market fit there.
Yeah, I've seen that plenty of times in the market, and I'm happy to talk about it if that's a topic you want to.
Yeah. So obviously a big challenge for companies when they're deciding when to focus on kind of organic growth versus inorganic growth through acquisitions. Yeah. How do you think companies in the market research space should kind of really strike that balance? And what factors typically determine whether a company should prioritize internal development of new solutions and tools or pursue M&A opportunities instead?
Well, I think what you just described, Katie, is a false choice, right? You can never forget about growing the business organically, ever, right? So organic growth is essential through all periods of the development of a company and needs to be your first priority. So getting the strategy right and great execution of the strategy is absolutely fundamental. Once that's established, you can start thinking about accelerating growth through a thoughtful M&A strategy, right? In other words, the overall strategy drives the M&A strategy, not the other way around. So what sometimes happens in M&A is that it becomes the goal rather than the tool. And as a result, it's not as cohesive. It doesn't deliver the results that you want. And in my experience, once that happens, you start compromising on delivering your strategic objectives and everything can go off the rails. Hopefully that makes sense.
Yeah, that makes a lot of sense. Yeah. So when you're looking for that kind of strategic fit that you just mentioned is vital and evaluating potential acquisition targets, how do you assess whether a company is the right strategic fit? Are there specific characteristics or synergies that you're looking for to ensure that it really does add that value?
That's a really important question that companies typically don't have a good response to. I like to start with the basics and then work towards more complex issues. So on the fundamentals, I believe you have to ask some basic questions, such as, does the target company deliver with excellence to clients, right? Do clients love the product and the team? And will they vote with their feet by giving you more and more business, right? So to me, that's fundamental. Are they solving the issues where you as the acquirer have gaps? So I'm thinking here about technology capabilities, maybe it's client servicing capabilities, could be analytical skills or improving the usability of the data and the recommendations, these sort of things. The other thing is, and this is a horribly overused sports analogy, is the target company skating to where the puck is going as opposed to where it came from. I think about that a lot when we used to assess acquisitions at Kantar. And also, and maybe this is the most important point from my perspective, can the target company be made better by being part of the acquiring organization? You've been through a lot of acquisitions, and I'm sure you've seen where it's a bit engineered and where it's genuine. That last point is really essential to me.
Yeah, that makes a lot of sense. I'd love to kind of hear a story about what was your most memorable or impactful acquisition that you made.
Well, there were a lot. I mean, we did over 100 transactions while I was at Kantar over 2 decades. I probably would say it was the acquisition of TNS, Taylor Nelson Software, in 2008 for lots of different reasons. One, it was transformative, I think, for the industry, just because of its scope and its scale. It was definitely transformative for Kantar. And then we began a process over 2 to 3 years of integration. So that probably was the most impactful. And also there were a few distractions as well, because it wasn't a friendly merger at the beginning in the conventional sense, right? So people from the industry will remember that TNS had agreed to merge with GfK, and then we interloped, and there was a bit of drama before the transaction completed. But ultimately, we did complete it, and I do think it was, even though not everything was perfect, I do think it was a big step forward for Kantar back in 2008.
Yeah, for sure. And as you mentioned, and for the industry, I remember it really well.
Yeah.
We've definitely seen a lot of consolidation, M&A, mergers over the past 2 decades in my career, and obviously certainly in yours. I myself was part of 4 of them. Some are really large, some are smaller tuck-ins, some are great, some are a little more challenging. So I think M&A activity doesn't really end at the deal. Integrating those companies successful is often where those real challenges start or begin. So what have you learned about, what are the keys to a successful integration in market research companies?
Well, you bring up a really important point, Katie. The acquisitions are tough for lots of different reasons, but particularly difficult on the acquired team's employees. So even when the integration is managed well, there's uncertainty and a certain degree of fear when the acquisition is supported more generally across both organizations. And this really needs to be taken into consideration by the acquiring company. I am curious, because you mentioned that you went through 4 different transactions. Tell me a little bit more about your experience around integration and what went well and what didn't go as well.
Yeah, I remember it really well. I went to Toluna when we acquired Greenfield and Chow. It was the same day that Michael Jackson passed away. So I remember we were very distracted in the office already that morning, followed by a huge news, and it was in 2009. So it was also part of a recession at the time. To come to your point, it was transformative for the industry, and a really important acquisition. I think what was really interesting was a French company acquiring an American company with 2 really big cultural differences as well. I was fairly junior at the time. I was a salesperson, learning new tools, shifting new CRM databases, kind of all those little tiny things that I learned along the way. My boss at the time, Mark Simon, who actually is a guest on the podcast also, had mentioned, he and I were working late in the office one day, and he said to me, keep an eye on what you see here and make sure that in the future, when you're part of acquisitions, what works well here, replicate. What isn't working well here, try and fix for the future. And so when I went through further acquisitions, I worked at Cint when we acquired P2 Sample, my brain immediately kicked into gear of, to your point, I want to fly down to Atlanta. I want to make sure I meet that new team. I want them to feel a part of the company and see what that end vision is, and help them through the kind of, hey, there's going to be tactical little things that have to get changed, databases, CRM tools, even using Slack versus other communication tools, etc. And just helping people along that way and feeling part of the new kind of family, I think is...
Yeah. I mean, that really resonates with me. And that's, I've had similar experiences, maybe being on a somewhat different side of a transaction as you have, and I would agree with you fully. If in my experience, the best integrations are ones where, one, there is clarity and transparency of communication. And I think you were just alluding to that. That's absolutely essential. Another thing that's really critical is that there's an actual integration plan from day one with very clear goals, clear expectations, clear areas of accountability as well. So that's absolutely essential. Another thing is that often organizations are very ambitious when you go through an acquisition and the related integration. I also think you have to be realistic as well. So you have to be realistic around timing, around resources to actually facilitate the integration. So you should push hard, but it has to be tempered somewhat by realism. And then maybe for me, perhaps the most important point around integrations is that there has to be a degree of acceptance that some people are unlikely to remain with the combined business over the long term, either because they opt out, and we see that sometimes, or they're just not the right people to take the combined business forward. Yeah, and so that's often means that there are often difficult transitions for both the acquirer as well as the acquired company, but that's really essential.
Yeah, that makes sense. So for the listeners who kind of are working at companies, maybe not CEO or CFO, but more of that middle and senior levels, maybe below the C-suite, what should they be thinking about when facing a merger or acquisition work, whether they're on the acquirer side or on the acquiree side? What advice do you have for those kind of employees who are part of it?
My best advice is be positive. Be constructive, ask good questions. They can be challenging questions, but I would look at it, if you can, even though it can be unsettling. So that has to be recognized, and not everything's going to be comfortable. But often these, and maybe you experience this, oftentimes these type of combinations lead to great professional opportunities. People have new challenges, get stretched in ways that they haven't historically. And even though it might not be a great experience, there's probably just as good a chance that it'll be a great experience and really catapult the company and your career as well. So my best advice would be try to be positive about it, be constructive, ask a lot of questions, and be part of solutions rather than part of problems.
Yeah, for sure. I definitely remember thinking, oh my God, what does this mean for me? And then I had to quickly reshape it into, oh my God, what does this mean for me? In a kind of far more positive, to your point, what opportunities, I now work for a much larger company with double the size. What opportunities are available to me here? And as my business coach always tells me, instead of I have to go through this, I get to go through this.
Yeah, exactly.
Changing that word is so important.
And, and for some people it's deeply uncomfortable and they just can't adapt. And, so that's okay. And that's why, as I mentioned before, they sometimes opt out. But those that, even when it's uncomfortable, can embrace change a bit, be willing to stretch yourself, be uncomfortable, it can often be a fantastic experience. That's what we found with many of our acquisitions, in fact.
Yeah, for sure. So looking ahead, what trends do you see shaping the future of M&A in the market research industry? Do you think we're going to see more consolidation? And how should those companies remain competitive, whether they're being acquired or be the acquiree?
I definitely see more consolidation, particularly as the effects of technology on our industry continue to accelerate. So that will definitely happen, in my view. Some of that consolidation is going to happen from M&A, but I also believe that there may be a more difficult period where some organizations don't adapt to change and they won't be viable businesses any longer. So some of that will be natural consolidation as opposed to triggered by M&A. On the other hand, I also expect to see another wave of innovation from new entrants into the market. And so as a result, even though, it might be bumpy along the way, I happen to think that there are going to be significant tailwinds for the industry. And I think we could end up seeing a real golden age for research.
It's great to hear.
Yeah.
On that for sure. It's been fascinating hearing all of your insights into M&A and market research. Before we wrap up, is there anything in the M&A world right now that really excites you or trends that we should keep an eye on?
I don't know if it's excitement because it's not the most sexy thing, but actually the thing that most encourages me is this resurgence around data quality.
Yes.
So, the industry has been heavily criticized over the last 2 to 3 years, I think rightfully so. And now people are starting to get much more focused about it. And we all know that data quality is the lifeblood of our industry, unless there's a recommitment to it by all stakeholders. All the exciting opportunities in front of us, particularly around artificial intelligence, won't be possible. So research providers need to do their part, but clients and the rest of the industry also need to do their part as well.
Yeah.
How about you? What excites you?
I would agree with you. It's a topic that's very near and dear to my heart. Quality has always been at the forefront of all market research. I think we've had a challenge the last couple of years. And even we at Suzy, we looked at what tools can I purchase to help with our quality. We couldn't find any. So we put our CTO to work and he went and built our own solution. So I would agree. Yeah. I think the quality space is going to be one to watch. And synthetic data, synthetic audiences, digital twins, I think is going to be the second area.
I would agree with you. Although what I also think is that if people what I would say is people tend to overestimate the impact of technology in the short term and underestimate it in the longer term. So if you're expecting complete transformation over 2 to 3 years, you may end up being somewhat disappointed. But if you were to project out 10 years, you might find an industry that's unrecognizable from the one that you have today.
Yep, completely agree with that. Awesome. All right. Well, thank you so much for your time, Jeff. This has been fantastic. Thank you. Bye-bye.
Thanks so much, Katie.
Thanks for joining MRII's Insights and Innovators podcast. Be sure to subscribe and listen to all of our podcast episodes and visit us at mrii.org for more insights for market research professionals.